Welcome everyone to Best Interest. This is Shane back for another stock pick of the day video. This will be the last one for the week. It will also be the last one for August. We are going to be into September whenever we come back next week. We are going to take a look at one out of the information technology sector, Nvidia. You're probably well aware of this. This is the stock market darling of the last, I don't know, five to six, 7 years anyway. Now, if you can do me a favor, hit that thumbs up button down below if you find any value in this content. If you are a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Best Interest community. Click that notification bell so you're notified whenever we put out any new content. I do the stock pick of the day videos this series Monday through Thursday whenever the market is open. So we won't be doing one on Monday. It will be Tuesday whenever we get back to it. The market is closed on Monday. And thank you to all of the subscribers out there. Really do appreciate all of you. The channel continues to grow because of people like you. Over 1,000 subscribers. Let's get to 5,000 and beyond. And I can only do that with your help. So again, everyone out there, make sure you hit that subscribe button and drop a comment down below. Let me know what you think of Nvidia. I know this is a bit of a stretch calling this a dividend stock, but they do pay a dividend, ever so small, and they have been paying it for a while, though it is minuscule, I'll say, at the least. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I'm interested in investing. If it meets 5 of 8 or 6 of 9, if it was a financial company like a bank or insurance company, I throw in price to book. Then it would go onto my watch list. Then I do more of a deep dive into the company. So it's a initial screener. Just because it meets the criteria of the screener doesn't mean that I'm investing. Again, it just means that it goes on my watch list. It is a quick way to look through the thousands of stocks out there, specifically for me, dividend growth stocks, and see which ones I might want to do more of a deep dive into the financials and potentially invest in the future. So we'll take a look at the screener at the end and see how this one stacks up. Back to Nvidia. Check them out at their homepage, www.nvidia.com. That's www.nvidia.com. That is their homepage where I pulled this information from. The world leader in accelerated computing, Nvidia's invention of the GPU in 1999, year after I graduated in 1998, sparked the growth of the PC gaming market, redefined modern computer graphics, and revolutionized parallel computing. More recently, GPU deep learning ignited modern AI, right? So there you go. Everyone's got their hand in AI, and NVIDIA is no different. The next era of computing, with the GPU acting as the brain of computers, robots, and self-driving cars that can perceive and understand the world. And it is pretty amazing some of the stuff they're doing now. I remember I was in some of the GM plants, and they had some robotics that instead of having someone pull the equipment or drive a forklift, the forklift was self-driving, and then you have these carts that had optic eyes that would drive around, and they would deliver material to different areas of the plant. They're really wild stuff they're doing now with robotics and this AI learning and all the stuff that they're doing now. Excuse me. As you can see, here are some of the products. If you were to go there, you could really click on it, but they get into generative AI, data analytics, interface. They offer software, obviously the hardware like the GPU still, different industries that they support. They mentioned EV, so that's the manufacturing and automotive industry. They sell computers. They'd probably come in and set up your whole data center if you were a company, a big up-and-coming company, like, or even an established company if you wanted to redo your data centers and incorporate everything. I'm sure they would come in and help you do something like that as well. So they have their hands in everything around technology, still pushing out the GPUs, AI. That's their bread and butter. This is a tech company. Reason we are taking a look at them, down 6.38% on the day. We are talking about Nvidia Corporation, ticker NVDA. They are out of the information technology sector. Closed out the day at $117.59. 52-week range as low as $39.23, as high as $140.76. And I believe they recently had a stock split, so this is adjusted based on the recent stock split. Market cap, $2.89 trillion with a T, not billion, $1 trillion. This is one of the rare trillion-dollar companies out there, multi-trillion-dollar companies, almost $3 trillion here, probably in next year sometime, I would imagine, bust over that $3 trillion mark if they could keep going the way they've been going. A beta of 1.68. Now, Yahoo Finance, where I pulled this information from, they did not have the beta, so I jumped over to stockanalysis.com, which would be the other source that I go to for information. We'll see them here in a minute. I picked up their beta from them, so they listed it at 1.68, which means they are much more volatile than the overall market. PE ratio extremely elevated, 54.98. Now, tech companies, even fast-growing tech companies like this, 30 to a 40 PE, you're getting up there whenever you get into the high 30s, into the 40s, but 54 PE, they have to be growing extremely, extremely fast to justify PE like this. I'm not saying Nvidia hasn't been, and I'm not saying that they won't be in the future, but that's what the type of growth you would have to see would have to be extremely fast to justify a price to earnings. I mean, you're paying $54.98 for every one share of their current earnings. So you are really expecting them to continue to grow extremely fast for an extremely long time. EPS $2.14 per share. Earnings date somewhere between November 19th and November 25. Forward dividend is 0.04, so 4 cents. They are, I believe, a quarterly payer, and their yield 0.03%. Current dividend yield very, very low. Ex-dividend date July 11th or June 11th. Looks like they paid out June 28th. So they should be coming up on another dividend payout here, unless they're not quarterly and they June, July, August, should be September. In September. They must just not have announced that yet. 1 year target estimate $123.35. So they see slight upside as far as price appreciation on this one, where it currently sits. 117 is about $5, maybe not quite $5, $4 and some change they expect over the next calendar year. So they might be close to what they're calling fair value, or at least the estimate for Yahoo Finance says. Let's jump over to, speaking of valuations, let's jump over to look at dividend yield theory and see what dividend yield theory says about its potential undervalue or overvaluation. To do that, we look at their 5-year dividend yield average, 0.11%, and compare it to their current, 0.03%. Up here, forward, 0.03, same number. That's what current is. It's the forward projected dividend into the hit. Could change tomorrow. If this was to continue to drop, it'll change the dividend yield. But anyways, right now, 0.03 being lower than their 5-year dividend yield average of 0.11 speaks to overvaluation on this one, at least according to dividend yield theory. Now, the payout ratio extremely low, 1.03%. So they can really raise this dividend aggressively. Hopefully they are. We'll see that here in a minute. Let's jump down to free cash flow. Typically, if a company has growing free cash flow, they have growing dividends to match. So going back to 2021 here, you can see 4.6 billion, 2022 up to 8.1 billion, 2023 up to 3.8 billion. Looks like a drop, but look at this repurchase of shares that they started doing. Free cash flow in 2024 so far 27 billion, and like I said, if you look at here, this huge increase in repurchase of capital shares looks like it's continuing into 2024. Yes, definitely growing free cash flow and steadily growing free cash flow at that. Now, again, I like to look at more than one source for information. Stockanalysis.com is another one that I go to. You pick any sources that you want. Just make sure you're not blindly following just one. Sometimes the information isn't up to date. Sometimes it isn't accurate. Sometimes it's missing, just like we saw with Yahoo Finance there. I had to go over to stockanalysis.com and pull the beta information because Yahoo Finance didn't list it, even though they obviously have a beta. Anyway, 38 analysts have taken a look at this. They call it a strong buy. Low estimate of $65. That would be a 44.7% decrease from where it currently sits. Average estimate of $144. That would be a 23.17% increase. And if it happened to hit their high of $200, that would be a 70.14% increase in the stock price. All the while, you could collect that, penny a quarter per share. Now, I like to jump into statistics. Look how well a company is reinvesting its capital back into itself. I look at metrics, return on equity and return on invested capital to tell me that. And I like 10% or better, and I'll just say these numbers are off the charts. Return on equity, 123.77%, by far the highest I've ever seen. Return on invested capital, same thing, 70.01%, very efficiently reinvesting their capital and utilizing their equity. Just extremely efficient. EPS growth, I like 5% projected over the next 5 years or better. They're sitting at 37.36%. So just again, smoking high. Revenue growth forecasted at 32.72% over the next 5 years. Again, smoking high. So if they were really to do that, 32% over the next 5 years, I don't know if it justifies a 50 PE, but it definitely justifies a higher than normal PE if they're able to maintain this type of growth. Now we're going to look at their dividend history here. Quarterly payer, yep, I thought they were. Looks like they'd be up March, July, September, December time frame. That's typical of payouts for most companies, March, July, September, December. And again, you can see you're going back to December 2021, they were paying fractions of a penny, 0.004 cents there, and they kept it all steady until June 2024. Most recent, they just raised it up to a penny. So a penny per share per quarter is what they're paying out. Very low payout ratio, 1.88%. Extremely fast dividend growth, 37.50%, and with only a 1% payout ratio, they could continue this growth into the future. So if you're looking for this is really a growth stock, in my opinion. Nvidia is a growth stock that pays a dividend, but an extremely, unlike some companies out there, tech companies specifically, that are growing their dividends, this is extremely fast dividend growth. Now it looks like they just did that right in June, so I'm not saying they're going to maintain that, but if they did, that would be extremely fast dividend growth, 37.5%. Buyback yield, they're doing their buybacks efficiently, 0.06%. Shareholder yield of 0.09%. Overall, good looking company, sound fundamentals from what I can tell. Hate the PE, very high. Let's see what the screener says. Back to the vested interest stock screener. Understand the business. Check there. Growing free cash flow. Yep, check there. Very fast growing. Growing dividend. Yes, extremely fast. The last raise was 35%, though it looks like they held it steady for a couple of years there. Dividend payout ratio 70. Yep, way under 75%. Under 5%. Very, very low. Dividend yield theory says it's potentially overvalued. No check. It is not close to a 52-week low. No check there. Return on invested capital and return on equity smoking high off the charts. Earnings per share growth, so check there. Earnings per share growth way over 5%, over 30%, so check there. 1, 2, 3, 4, 5, 6. This one's definitely going on my watch list. I did not know Nvidia even paid a dividend. To be honest with you, I thought it was just a growth stock. I know I've looked at it before, but I guess I just didn't pay attention. I don't think the valuation right now is where I'd look for an entry point, but if it continued to drop the way it has the last few days after earnings here, might present itself for a good buying opportunity. Might be worth throwing on your watch list. I know I'm going to throw it on mine. I'm going to try to do a discounted cash flow analysis, see what I want to pay for this one. All right, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read or respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Nvidia you'd like me to cover in the Stock Pick of the Day series, drop in the comment down below. I will work it into rotation. Let me know what you think of Nvidia. Is it in your portfolio? Is it one you're watching? Is it one you're waiting for a better buying opportunity? The dividend growth. So dividend growth investors should love that dividend growth, at least the most recent one. So let me know what you think down in the comment section below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest in your educational and entertainment purposes. Invest involves risk. Gains money, so never invest any money. Now, losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or see the investing counsel that's certified financial advisor.